The 7702 revolution. Why 2026 is the year of private wealth architecture. The tax landscape just shifted under your feet, and most people are still looking at 2019 maps. I'm Lamont Poteet, and today we're talking about the most powerful 4 digits in the Internal Revenue Code, 7702. If you think life insurance is just about a death benefit, you're missing the greatest tax-free accumulation tool ever legalized. With the recent Big Beautiful Bill making certain tax cuts permanent and the sunsetting of the 2025 tax state exemptions, the window for private wealth architecture is wide open. Today, we're breaking down weekly news in the 7702 arena and how you can use these rules to build a fortress around your asset. Let's get you fitted. The 7702 interest rate shift. First up, in the news, the fallout of the 7702 interest rate overhaul is finally hitting the stride in 2026. For decades, the IRS mandated a 4% minimum interest rate for policies to be considered insurance. When rates dropped to 2%, it fundamentally changed the math. What does this mean for your pockets? It means that now you can cram significantly more cash into a policy with significantly less death benefit without turning it into a MET. We're seeing carriers optimize their 2026 product lines to take advantage of this. If your policy was written before 2021, you might be driving a vintage car in a Formula One race. The efficiency gains we're seeing in cash value accumulation tests are allowing for higher interest rates of return than we've seen in decades. The estate tax sunset and the 2026 opportunity. Now, let's take a look at the estate tax cliff. As of January 1st, we saw the exemption of amounts for high net worth individuals shift dramatically. While the Big Beautiful Bill provided some relief, the reality is that Uncle Sam is getting hungrier. We're seeing a massive trend in annuity arbitrage and IUL planning, used to create tax-free buckets for the next generation. Strategic planners are no longer just buying protection. They are buying private liquidity. Recent data shows that 80% of IUL buyers right now are conservative to moderate investors who are tired of market volatility. They want the zero is your hero floor, but with the tax-free exit strategy of Section 7702. If you aren't using the IUL as a volatility buffer in your portfolio yet, you are essentially volunteering to pay more in capital gains tax than necessary. Deep dive. The private banking strategy. The big headline this week in the strategist community is the rise of connected intelligence in underwriting. We can now get these high cash value policies issued in days, not months. I want to look at the case study, the 7702 cash vault. By utilizing the lowered guide premium test limits, we're helping clients move stagnant, highly taxed brokerage money into 7702 compliant contracts. You're getting tax-deferred growth, tax-free access via policy loans, and tax-free completion funds for your family. This isn't insurance, it's an asset class. In DC and across the country, I'm seeing smart money exit the traditional buy and hope strategy and move into the contractual world. Conclusion and call to action. The news is clear. The iOS gave us the playbook with Section 7702, but most people haven't read the latest edition. Whether you're a business owner looking for a golden executive bonus or an investor looking for a place to park capital away from the tax man, 7702 is your answer. But remember, these policies are built, not bought. You need an architect, not a salesman. If you want to see how your current portfolio stacks up against the new 2026 7702 standards, book a consultation with us in the link below. My name is Lamont Poteet, and I will see you next week for the 7702 update. Peace.